I just got back from a weekend trip to Florida with my wife and my son, and the best part about it is that my business picked up the tab and paid for it 100%. That Florida trip ended up being around a $1,400 tax deduction, and yes, even though I brought my family, it still counts. This trip wasn't a vacation. I attended a small business networking event over the weekend that one of my clients was hosting, and of course I made sure to document everything correctly. Here's the total breakdown of what I was able to deduct for the business. The total round trip took around 903 miles, and using the 70 cents per mile deduction, that comes out to being around $632. The Airbnb rental itself was around $268. All the food, snacks, coffees came out to around $440, but remember, only 50% of that is deductible as a travel meal. The event fee itself was only $35, and if you add all that up together, that comes out to being almost $1,400 that my business picked up as a business expense. And yes, it was all deductible because I followed the IRS rules and regulations. So let's break down what exactly makes a trip deductible. The IRS allows you to deduct travel if the primary purpose of your visit was for business, whether that be some kind of networking event, a conference of some kind. If you're meeting up with a client at a state or you're planning an expansion to a different area, all of those things count. And in my case, the whole purpose of the trip was for me to make it to that networking event that one of my clients was hosting. That made the purpose crystal clear. Now, this is where a lot of business owners get tripped up. In order to write off a trip, you have to document and track everything. Make sure you save all of the receipts. Maybe keep a calendar or some kind of proof of the event that you went to. Make sure if you're tracking mileage, you use a mileage tracking app, which QuickBooks Online has. This is what I use mainly for my business. Document your Airbnb booking. You can just upload the screenshot of the receipt from the booking itself. The event registration, every meal receipt, make sure you document it. But the caveat is, with any meals, they can't be extravagant or lavish. They have to be something that you would consume ordinarily. And remember, that write-off is only limited to 50%, not the total 100%. And like I said earlier, I use QuickBooks Online for all of my receipt tracking, all of my mileage tracking. I'm not sponsored by QuickBooks or anything like that. That's just what I use as an accountant to track my own bookkeeping, as well as for many clients that I have as well. That way, everything just stays organized and in one place. It's all saved to the cloud, and anytime the IRS might think about auditing me or any one of my clients, I have all of that information ready to go. Now let's talk a little bit about the meals portion of it. Like I said earlier, only 50% of that was deductible. So out of the $440 that I spent, my business can only write off $220 as a business expense. And the best practice that I use, anytime you have a business meal, whether it be in town or if you're out of town, whenever you have the receipt, write the business purpose of that meal at the top of the receipt, who was there at the meal with you, and then just take a quick little picture, upload it to QuickBooks or whatever receipt management app you use, and then just let it sit there in case you ever need it. And this is a perfect example of why bookkeeping matters. If you're not properly tracking your expenses, you can either miss out on expenses, or in the case of an IRS audit, you can get into trouble because you're not able to produce records of what you spent and what was a business expense and what was personal. And if you're a business owner, trips like these are an amazing opportunity to lower your tax bill, especially if you were planning on going there anyways. Just because you spent one evening at the beach doesn't make the entire trip not a write-off. As long as there was that clear business purpose for the trip, you're in the clear. So let's do a little bit of a recap. Here's how to make your next business trip tax deductible the right way. First and foremost, the primary purpose of that business trip has to be business. Second is to make sure you track all of your mileage, track all of your receipts, and all the dates in your accounting software that you use. Number 3 would be to save the business purpose proof of the activity that you were going to, whether it be a conference, it could be a schedule of some kind, anything that proves that you were there strictly for business. And number 4 is to make sure you understand that all of your meals are capped at 50% deductibility for travel. And the 5th most important thing is to make sure you keep everything well documented and you keep all of the receipts in the case you ever get audited by the IRS. That way you have nothing to worry about. And the thing that made this trip more fun than it already was that business deduction. When you understand the tax code and you keep good records, your business can support the lifestyle you want to live. If you're ready to stop guessing and start building a better business, subscribe. I'll help you keep your books clean to maximize your deductions and most importantly, to stay compliant in the eyes of the IRS.